Germany, Europe's largest economy, is facing significant financial challenges due to a combination of structural issues, policy decisions, and external shocks. Energy crisis and dependence on Russian gas. Germany heavily relied on cheap Russian gas for its industrial sector. The Ukraine war and subsequent sanctions disrupted supplies, leading to soaring energy prices. Industrial slowdown and loss of competitiveness. Industries like chemicals, steel, and manufacturing, key pillars of Germany's economy, became less competitive globally. High energy costs have forced some companies to cut production or relocate abroad. China's slowdown has reduced demand for German machinery and automobiles. The transition to green energy and electric vehicles has been slow, hurting traditional auto giants like Volkswagen and BMW. Budget crisis and constitutional debt break. Germany's strict debt brake Schuldenbremse limits new borrowing, making it difficult to fund stimulus programs. A 2023 court ruling blocked the reallocation of unused COVID funds for climate initiatives, blowing a €60 billion hole in the budget. The government is now forced into austerity, cutting subsidies and public investments. Aging population and labor shortages. Germany has one of the world's oldest populations, increasing pension and healthcare costs. Skilled labor shortages are worsening, hampering productivity growth. Weak global demand and export decline. Germany's economy is export-driven, but global demand, especially from China, has weakened. The Eurozone's sluggish growth further dampens trade prospects. High bureaucracy and slow digitalization. Excessive red tape slows business innovation and infrastructure projects. Germany lags in digital transformation compared to the US and Asia. Germany's economic challenges are severe but not insurmountable. A multi-pronged strategy combining short-term stabilization, structural reforms, and long-term investments is needed to restore growth and competitiveness. Reform fiscal policy and boost investment. Suspend or reform the debt brake Schuldenbremse. Allow temporary deficit spending for strategic investments, energy transition, infrastructure. Follow the EU's looser fiscal rules. 2024 reform allows more green/defense spending. Issue special climate bonds, like EU recovery funds, to finance renewables and grid upgrades. Create a sovereign wealth fund, like Norway's, to manage debt and invest in future technologies. Tax reforms. Shift from high labor taxes to wealth/carbon taxes to encourage hiring and green innovation. Accelerate energy transition and lower costs. Fast-track LNG terminals and renewable energy projects. Cut approval times from 5+ years to 2. Subsidize industrial electricity prices, like France's €100 per megawatt-hour cap for key industries. Triple wind/solar capacity by 2030, target 80% renewable electricity versus 50% today. Build hydrogen infrastructure for steel/chemical plants, €20 billion planned by 2030. Revive industrial competitiveness for manufacturing. Cut energy taxes for industry. Germany has the highest electricity prices in Europe. Offer tax credits for automation/AI adoption to offset labor shortages. Massive EV battery production push. Match US IRA subsidies to prevent relocation. Partner with China on tech, VW's joint ventures, while reducing overdependence. Fix labor shortages and demographics. Fast-track skilled immigration. Simplify visa rules. Copy Canada's points system. Raise retirement age to 68, gradually, to keep workers active longer. Boost birth rates with better childcare/family subsidies, like Sweden's model. Upskill workers in AI, green tech, double vocational training funding. Diversify trade and reduce China dependence actions. Strengthen EU trade deals, Mercosur, India, to replace Chinese demand. Incentivize friendshoring, move supply chains to EU/Eastern Europe. Digitalize bureaucracy and boost innovation. Reforms needed. Mandate e-government, cut red tape holding back permits. Double R&D spending, currently 3.1% of GDP, target 4% like South Korea. Germany can recover, but only with bold reforms. While Germany isn't bankrupt, its economic model is under severe strain. The government is struggling to balance fiscal discipline with the need for investment in green energy, defense, and infrastructure. Without reforms, Germany risks long-term stagnation.